Hello and welcome to the half-year update for the European Smaller Companies Trust. The first half of the financial year, up to the 31st of December 2025, has seen a period of decent performance, with the NAV up 7.73%, outperforming the MSCI Europe ex-UK Small Cap Index by 0.61%. The performance, for better or worse, was largely driven by idiosyncratic stock selection. Significant positive contributors included Acast, a Swedish podcast platform that helps host, distribute, and monetize podcasts through advanced advertising technology. As podcasts grow, more advertising dollars will head to this medium, and Acast is well set to benefit as the only global platform. Also, uBlocks, the Swiss positioning module company, was bid for and taken private by Advent at a disappointing premium, yet it was a positive contributor. Also, Fistra, a German IPO in the early summer of 2025, went up threefold. The company does connectors for the grid and are seeing strong growth as all developed countries clamour to upgrade the national grid to deal with the increasing demands of renewables and artificial intelligence. We have subsequently exited this position on valuation. In the same space, R&S, doing transformers for the grid, was a negative contributor to the portfolio. Whilst they are seeing similar strong growth, the need to invest in their own infrastructure to meet that demand led to disappointing profit margins. We had largely exited our position at the time of the profit warning, avoiding some of the pain. We have subsequently built our position back up on the correction. As an AI enabler, we believe the company's medium-term growth is now significantly undervalued. Other detractors in the 6-month period included Ströer, the German outdoor advertising market leader. 2025 was a year of subdued performance after a stellar 2024. The company's share price suffered as there was bid speculation in the first half of 2025 that failed to come to fruition. We remain massive believers that outdoor advertising will continue to take advertising market share. Ströer should also be a beneficiary of the improving German economy that is starting to emerge. Another German company that delivered disappointing performance was Ionos, a provider of web hosting and cloud infrastructure for the small-medium enterprise sector. They delivered underwhelming results and, as a precursor to recent weeks, was hit hard on the perception that AI may disrupt their business. In the first half of the financial year, we also had the integration of the European assets portfolio. So there was a higher degree of turnover than usual to rationalize the two portfolios into one. We have continued to try and recycle the money into more undervalued stock opportunities. We have increased our exposure to quality industrials, such as chemical company Fuchs and chemical distributor IMCD. We have bought these companies at trough multiples in the expectation of an improving global economy. We have also bought into turnaround companies such as AMS Osram, which post a recent disposal has reduced its balance sheet leverage and now become a pure-play leader in digital photonics, which in the medium term should benefit from the megatrends such as augmented and virtual reality and data center growth. Another turnaround company we bought is Viridian, the French data science company for the oil services sector. Disposals over the period have included a number of companies that were bid for. In addition to uBlocks, we saw bids for Spanish insurer Catalana Occidente, Irish hotel group Delata, and the Athens Stock Exchange. We also took profits in several companies, including long-term turnaround winner, cable manufacturer Nexans. It is still seen as an AI enabler, but has seen the very successful CEO and CFO leave and suffered from contractual delays. Another long-standing holding where we took profits was Nordnet, the Swedish financial platform. In terms of outlook, as we enter calendar year 2026, the backdrop for investing in European smaller companies is largely positive. 2026 has, however, brought huge volatility to share prices, as huge swathes of the economy in a shoot-first mentality have been labelled AI losers. This has led, in the short term, to underperformance of the portfolio versus the index. We will make methodical assessments and make relative choices and hope we get more right than wrong and try to exploit this volatility. European smaller companies are geared to global growth, and the economy in the US and continental Europe is improving. Real wages are up, inflation is benign, and interest rates are coming down. Valuations in European smaller companies are trading at a significant discount to their larger peers. We think the greater earnings growth and the upgrades we will see in the more cyclical smaller company space should see a broadening out of stock market performance. And after 5 years of underperformance, see European small cap outperform their larger peers. More specifically, after a naively false start in 2025, we expect to see German smaller companies outperform on the back of the country's fiscal stimulus. The portfolio with a heavy overweight position in Germany should benefit nicely. So currently, we have short-term AI volatility, but with low valuations and an improving economy, we are hopeful for a positive year for the European Smaller Companies Trust.